Financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
Two things. A lot of you don't realize the equity position you may have or the options you now may have to adjust your financial position, whether you have a higher interest rate than you should, meaning anything above 4%, you should be talking to somebody, whether there's other options, because it could be an ARM, could be interest only, whether you need to pay down debts, or if you want to go and buy that home that you've been hoping to buy. There's so many options that you really need to think about and talk to a professional. We prefer Skyline Home Loans here because I can promise you that you'll get sound advice.
Yeah, and I'm absolutely crazy passionate about two things. One is debt consolidation, because people fall in love with the equity in their house. And one of the things that I see a lot is, well, we've got $400,000 equity, but I'm $60,000 in credit card debt. Well, that's just not smart.
Yeah, cash poor.
At the end of the day, that's just not smart. You're paying 13 and 12 and 7% on your interest rates on your credit cards. Mm-hmm. And then I hear the funny story, I moved it all to a 0% card. Well, when you did that, you ruined your credit,
because now it's tapped.
Yeah, because now it shows that your credit's tapped, so you lose 30% of your FICO score when you do that. So, be very careful when you're navigating with debt, because debt is debt is debt. It doesn't matter what it's secured by or what it's tied to.
All right. I mean, like you said, I just realized we're working on with a retired lady, basically, and she's going under because she's helping out her kids, and she's had to tap out all her cards because of it, but she doesn't have any cash position to knock them all out. But good thing is she has just enough equity that we're going to knock out $40,000 in debt, at least $40,000. We're going to save her, I'm going to trump you, $1,000 a month.
Yeah. Well, you also get these people on TV telling you all the time you should never do that, ever. And I'm shaking my head at the TV saying, that's ridiculous. Well, you should take advantage of your equity position, knock it out, and just, if you want to, just continue paying what you pay now.
Right, there you go.
And then you'll knock out that even faster, because the interest rate's going to be way lower on a mortgage than it is on a credit card.
And then, like you said, if you want, like what they're saying is that they don't want you re-upping your amortization, meaning if you have 24 years left, say, on your home, they're saying, why start over at 30? Okay, let's lower all that cost, and let's take a piece of your savings. Take half of it. Reapply it towards your principal. It'll knock out the interest you're paying, and you'll pay off your home actually faster and have extra money in your pocket. There are strategies that you need to think about. And what's nice is we use, what's our
mortgage coach.
Yeah, there's that. Because everybody on our team here at Skyline uses an incredible program that shows you the numbers, because numbers don't lie. That's why we love our job, right, Gino?
Yeah, I mean, we talk about Mortgage Coach. The reality is it makes us better lenders. If your lender's not using Mortgage Coach, it's very hard to make complex amortization calculations in your head. It's possible, but to figure out how much extra payment you have to make it a 22-year loan instead of a 28-year loan.
What's your true savings? What's your true costs?
Right.
What are your options?
Yeah.
How do you compare
if I make
the
an
options?
extra payment, how many years am I going to save off of that?
Right.
All of that stuff's very complicated. Mortgage Coach makes it real easy for us to compare multiple products side by side. And here's another thing. If your loan officer does not ask you about your time horizon, run.
Yes.
Because, ultimately, the biggest mistake I see, and it's the first mistake I made when I was not in this business, but I was a consumer, is I took a 30-year fixed on everything I did. And that's an absolute catastrophe. I've at least given up over $200,000 in interest that I should have never paid if I would have had a better advisor.
Yeah, that's important. Here's another thing you should be looking at, and we're just saying whether you choose the Skyline Home Loans or not. We're located right here in Valencia. I've been doing loans out here for 29 years. All of us, we're committed. We live out here. We love here, and we're accountable to here. So think about accountability. You can go to SantaClaritaHomeLoan.com, SantaClaritaHomeLoan.com. That's our local website here, and you'll see that we have, I think, over 55-star reviews on there. Check out our Yelp. Check out Zillow. We have nothing but, I think there's 1 4 in all of our reviews. Seriously, because we care. And what I'm getting at is accountability, because there's a lot of industry people, and this is what you hear, the horror stories of bait and switch, where you're getting quoted a certain interest rate or a program or something they say they can do, and they don't do it. That never happens here at Skyline, right, Dan?
That's exactly right.
I know what you lay out, that's what's going to happen, right?
Every time. You don't get a good reputation without doing that every single time.
Yeah. And so just real quick, we'll just graze this, but Do you really want a discount lender? I mean, I know as a branch manager, I know what the talent pool is like at those discount lenders.
We do.
Okay, I know exactly who works at, and I'm just going to say,
Yeah, we're
Quicken
not
Home
recruiting.
Loans or at the banks, and I know what the talent pool looks like versus the professionals that we have here in our
Well,
office.
it's a lottery. If you get the one or two or three there are some good lenders at the banks, but you
Only waiting to be discovered
it's-
by people
it's-
like us.
Yeah, exactly. Exactly.
I mean, really, it's where we try to find talent.
Yeah, and then we pull them over here where they can do it. We have multiple options. A bank, unfortunately, only has one option. That's their money. And if it doesn't fit, you don't fit in that box, then they're going to try to squeeze you in that box. Whereas we have multiple investors, multiple options, multiple ways to make sure you achieve your goals, not their goals, your goals, and we ask the right questions. And it's really all about that. All right, so when we come back, we're also going to go into what's happening in the real estate market now. It changes daily, by the way, at least weekly. That's why we have a weekly show. That's right, every Saturday, 9 a.m. to 10 a.m. We're going to talk about the stock market and what to watch out for. Where's the economy going? Where's rates going? And is this the right time to buy or sell a home? And we think what's beautiful, it's the right time for both. So when we come back, we're going to dive into those details so you're going to be in the know of what's happening today right here on the Don and Gino Real Estate and Finance Show. We'll be right back.